Did you know that Cathie Wood is more bullish on Tesla than ever amidst market uncertainties? Over the past several months, numerous have lost their trust in Tesla and its CEO Elon Musk. In fact, many have dropped Tesla stock from their portfolios because of its unsatisfactory performance. However, Cathie Wood proves to be different as she continues to support the leading EV company. Don't miss this one. Amidst seemingly endless roadblocks for Tesla, Cathie Wood says she's as bullish on Tesla as she's ever been and even sees the stock up fivefold in 5 years. In early January, Cathie Wood bought Tesla stock on the day of its biggest plunge since September 2020, reaffirming her conviction in the electric vehicle maker that many other investors have turned their backs on. Funds backed by Wood's firm ARK Investment Management LLC bought more than 176,000 shares of the automaker in the first U.S. trading session of this year, according to ARK's daily data. The purchases came as Tesla stock plunged 12% after the company missed estimates for quarterly deliveries despite offering hefty incentives. Wood's exchange-traded funds have acquired slightly more than 938,000 shares of the EV maker since October 3rd, when they started their latest buying spree, according to ARK trading data compiled by Bloomberg. The October to December period marked the first quarter in 7 in which ARK net bought Tesla stock. As many are aware, it was a rough close to 2022 for Tesla. They discounted aggressively in the US last month, initially offering a $3,750 price reduction to anyone taking delivery of a new Model 3 or Model Y by the end of the year. In December, increasing the incentive to $7,500 along with 10,000 miles of free charging for the final 11 days of 2022. However, this seemingly drastic move from the leading EV maker didn't pay off. Tesla still disappointed investors after announcing weaker-than-expected deliveries for the fourth quarter. One can argue that Tesla was discounting cars in the previous month to offset refreshed tax credits that would be rolling out in 2023, but then it was learned that the tax breaks won't apply to many of the automaker's offerings. Tesla's third straight quarterly deliveries miss prompted several analysts to cut their price targets for the stock, dropping Wall Street's average 12-month forecast to the lowest since October 2021. Still, the consensus target price implies that shares should more than double over the next year. Speaking of speed bumps, Tesla has taken a pretty big hit since Elon Musk took over Twitter. The stock is down 45% since Musk officially became the leader of the social media platform on October 27th. The market is actually up 4% in that time. Stretch the stock chart to its peak in late 2021, and Tesla shares are down 70%. Investors were disappointed by the weaker-than-expected deliveries for the fourth quarter, but the good news here is that Tesla continues to gobble up market share. Last year was challenging for automakers, but Tesla still saw a 40% surge in vehicle deliveries in 2022. Still, if there's one position that Wood has been adding to consistently over the past couple of months, it's Tesla. She's been adding as the stock has been sliding, and she hasn't stopped now that it has shifted out of reverse this year. ARK's CEO Cathie Wood remains bullish on Tesla, saying that the oil stock rally defies logic. A few days ago, star stock picker Cathie Wood of ARK Invest suggested the rally in energy stocks will soon end, and reiterated her bullish view on electric vehicle maker Tesla in a webinar. Wood, whose $6.8 billion ARK Innovation Fund, up 15% for the year to date, was badly bruised last year by the Federal Reserve's aggressive pace of interest rate hikes that weighed heavily on the sort of technology stocks she focuses on. Yet the rally in energy stocks over the last 6 months, despite the roughly 30% decline in the price of oil, suggests that the market is now overvaluing value stocks, says Wood. The market is defying logic from our point of view, said ARK Invest CEO. The widely owned Energy Select Sector Spider Fund, which tracks the shares of energy companies, rose 1.2% Thursday and is up nearly 40% over the last 12 months. Tesla, on the other hand, will continue to take market share as global oil demand falls by 30% or more over the next 5 years, Wood estimated. According to Wood, the company's recent moves to lower its prices will likely continue aggressively and put pressure on other automakers to match them, hurting its competitors significantly. "We are as bullish about Tesla as we have ever been," says Cathie Wood. Consequently, ARK remains bullish on Tesla. Wood believes that Tesla will go 10x. In an email update to investors, Wood explained that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry and consequently traditional automakers in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty, but I think as consumers start to shift from gas-powered to electric and look at the specs of different cars," says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. In a Yahoo Finance interview last year, ARC CEO Cathie Wood emphasized their belief that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate to electric vehicles. Tesla has grown into the largest car company in the world, and now sits atop the industry. Tesla and the EV sector in general is entering a new phase, and the company is positioning itself to continue to lead the way forward. While returns over the coming years may not match prior results, Tesla has a lot of irons in the fire. It's worth looking closely at whether now is a good time to invest. In mid-October, another ARC executive expressed optimism about the leading EV company. During a CNBC's Squawk Box interview, ARC Invest CFA Tasha Keeney shared the reason for ARC's positive stance on Tesla. Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." Wood also told Yahoo Finance in a separate interview that Elon's main role at Tesla right now is moving it towards an autonomous taxi platform, which I think will happen in 2024. I think he thinks it will happen next year. I think he's as focused as ever on that. Tesla is the world's dominant seller of electric vehicles and is well positioned to take advantage of some of the IRA's tax credits for battery cell manufacturing and locally assembled EVs. But in order to meet its goal to grow deliveries by 50% annually over several years, an objective Tesla warned it will fall just short of in 2022, Tesla will likely make compromises when it comes to gross margins. Tesla has cut prices across its lineup in China and scheduled downtime at its plant in Shanghai. Bullish analysts and investors believe that Tesla will continue to take the leading role in the electric vehicle revolution that has finally gained traction. They also believe that Tesla will lead in other green energy fields, such as solar panels and energy storage devices. Bearish analysts and investors, on the other hand, feel that the company will fail to live up to expectations and will just become another production company, rather than something innovative and special. Bears view the company as overvalued, susceptible to competition, and overly subsidized. Other analysts expect Tesla deliveries to grow about 40% in 2023, hitting 1.8 million to 1.9 million cars, up from roughly 1.3 million in 2022. Meeting 2023 delivery estimates will go a long way to convincing investors that 2023 earnings estimate is sound and that Tesla stock might have sold off a little too much this past year. Overall, Cathie Wood and her investment firm ARK Invest remain more bullish than ever on Tesla stock. Wood, who is a huge proponent of innovation, continually shows her support for Tesla and its forthcoming innovative projects. Subscribe to Tesla stock for more updates in 2023.